Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a report from OppFi, and trust me, this one has a twist you won't see coming. We're talking about a special dividend, but not the usual kind. Get ready to find out what's so special about it. Alright, so this is an 8K filing, which is basically a quick update a company gives to let investors know about important events. The date to keep in mind here is March 25, 2025, because that's when all this happened. Okay. Jumping to the juicy part, there's a press release they put out. This is all about making sure everyone gets the information at the same time. No insider secrets here. They're announcing something big, which we will get into later. Here's where the story really begins. On March 25, 2025, OppFi announced that their board of directors decided to give out a special common stock dividend. Think of a dividend as a company sharing its profits with its owners, the shareholders. In this case, it's $0.25 per share for everyone holding Class A common stock. This is a one-time thing, not a regular payment. The payment is scheduled for mid-April, but you have to be a shareholder by early April to receive it. Now it gets a bit more complex. It's not just the regular shareholders getting a payout. The company is also giving out a similar payment to those who own units in a related business, Opportunity Financial LLC. It is the same amount, $0.25 per unit, and also requires you to be a holder by early April. If you want more details, you can always read the press release, but we're going to tell you everything you need to know here. So what's the big deal? Companies usually pay dividends from their profits to reward investors. A special dividend suggests they have extra cash lying around and want to share the wealth. Why is this interesting? Well, it tells us something about how the company is doing. It shows they're confident enough in their financial situation to give extra money back to investors. It's like saying, hey, we're doing well, here's a little something extra. But like with everything in the world of finance, there is a catch. Giving out a dividend, even a special one, means the company is using up some of its cash. This could mean they have less money available for other things like growing the business, buying other companies, or handling unexpected problems. Now, let's step back and look at the big picture. OppFi is in the business of lending money to people who might not have the best credit scores. This is often called fintech, combining finance and technology. It can be a risky business because there is a higher chance of people not paying back their loans, but it can also be very profitable because they charge higher interest rates to make up for that risk. So why give out a special dividend now? Maybe they had a really good year and they want to reward shareholders. Or maybe they don't see as many opportunities to grow the business right now, so they're returning the extra cash to investors instead. It's also worth considering what message this sends to the market. A special dividend can make a company look attractive to investors, especially those who are looking for income. It might encourage more people to buy the stock, which can push the price up. What does this all mean for OppFi? Well, it's a mixed bag. On the one hand, it shows confidence and rewards investors. On the other hand, it uses up cash that could be used for other things. It really depends on what the company does next. Will they continue to be profitable and grow the business? Or will they run into trouble down the road? One thing to keep in mind is that the financial world can change quickly. What looks good today might not look so good tomorrow. So it's always important to do your own research and not just rely on what a company says in a press release. Now for the elephant in the room, why common stock dividend instead of a cash dividend? Well, that's the unusual part about this situation. Typically, when companies share their profit, they pay it in the form of cash to the shareholders. Why not give the dividend as cash instead of stock? Well, by distributing stocks instead of cash, the company conserves its cash flow, meaning that it doesn't need to spend its cash. This is really useful if the company's future performance is unclear, for example, due to changing market condition or industry downturn. So taking everything into account, what's my take on OppFi? It seems like they're doing okay, but they're playing it safe by giving out stock instead of cash. They have good cash flow, but they prefer to use it to run the business instead of giving it to shareholders. This way they have more options in the future. In conclusion, this special dividend tells us a lot about OppFi. They're profitable, but they're also cautious. They want to reward investors, but they don't want to give up too much control over their cash. It's a balancing act, and it will be interesting to see how they do in the future. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. Until next time, stay curious.